welcome back to Fast Stock Market News, where I give you all the news as fast as I can. So today was another great green day in the stock market, guys. We had a nice power hour at the end of the day. We can see S&P 500 finishing almost 1% in the green, the Dow finishing 0.51% in the green, NASDAQ having another strong day, finishing 1.36% in the green, Russell actually finishing a little bit negative, 0.12% in the red, and crude dropping down, which is good. Overall, for us, they want lower gas prices. So you can see the biggest winners of the day was Tesla. Tesla actually having a great day in the stock market, basically carrying the S&P and the NASDAQ by itself. Tesla with a tremendous day. Another good thing that happened today is we saw the dollar starting to weaken a little bit, which is great for long-term profits for companies, and overall just good. If that continues to happen, we could still see more rally in the stock market going forward. Especially we definitely need a weaker dollar. But you see S&P 500. I mean, Tesla had an absolutely amazing day, finishing almost 10% in the green. It is up over $800 for the first time in I think a couple of months at least. Was the last time it was at 800? About May 10th. It's been a while, guys. That's how long Tesla's been trading below $700. Amazing move by Tesla. One of the big things that happened today in the European markets, the European Central Bank actually raised interest rates for the first time in about since 2011. Yeah, about 11 years ago, since they have raised interest rates. As you guys know, the Fed has been raising interest rates for the past few months here in America. So this is a milestone over there in Europe. But one of the big things that's happening, which is Fed's getting its way because they started raising interest rates a few months ago, is that jobless claims are actually starting to rise again. In fact, that jobless claims actually were up higher, and they're at their highest level since mid-November. This is kind of like that recession thing that needs to happen in order for the demand to start to cool down in the economy, and the Fed's getting its way. It's like claims are going up higher. And one thing that I wanted to showcase is just to show you guys the report of how significant this is, because it has been almost since 2021, back in 2021, since these claims were up this high. Take a look.
Let's get right back over to Steve Leisman. He's got some economic data that just hit the wires. Steve, what are you seeing?
Jobless claims coming in more than expected, Becky, topping that 250 mark that now I guess raises some questions about the extent to which we have some real weakness in the job market. Now, this is going to be a test of the idea of all of these job openings. You could imagine, given what's happening in the economy right now, that there are some layoffs in one sector, and yet this idea that there is all of these unfilled jobs out there might suggest that over a very relatively quick period of time, these workers would be picked up and find jobs elsewhere. We don't know that, but you can imagine there could be a spike, and it wouldn't necessarily portend things going particularly bad in the job market given the number of job openings, pardon me, and how tight it's been. Philly Fed, though, coming in much less than expected, minus 12.3, whereas it was expected to be minus just a little bit there. Sorry, just plus a little bit, plus 1.6 on the estimate. And then, of course, the European Central Bank doing more than expected, coming in at a 50 basis point rate hike. The first time in 11 years they have increased rates. That sent the euro over 102, a place it hasn't been in a little bit. German bond yields rose. Italian bond yields rose a little bit less because there's this mechanism they're talking about to smooth interest rates. Talking about free market or lack thereof, why they would do that is unclear, and whether they will do that in the case of current Italian political tumult is unclear. And let me just show you a chart, guys, about the problem the European Central Bank is dealing with. What this is a snapshot of just a couple minutes ago, the rate differentials on the 10-year. You can see there for France, the French 10-year trades 60 basis points over Germany. In Italy, it's 230 basis points, Greece 220, and then Spain 123. So, and that reflects, I think, some market ideas about the differences in the finances of those countries. So that's what Lagarde has to deal with, and we'll have a press conference in just a couple minutes.
That basically does it for me today. Another green day in the stock market. I hope you guys enjoyed the news, and I'll see you again tomorrow. Take care, everyone. Thanks again, everyone, for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.